So this is where we left off in that our last session. We're talking about this indecision candlesticks. All right, the indecision candlesticks. The indecision candlestick, we talked about the doji, then the spiny top, and the high wave candlestick. So all these ones, anytime you see these candlesticks on your chart, you just know that the market is at a level where either the buyers and the sellers, they are indecisive. They are planning whether to, if it's the seller, they are planning how to still contemplate whether to push the price again downward, or they should just uh, rest for a moment. Also, the buyers at that point they are thinking of either to push the price higher on that level. At that point, they are contemplating on what to do. So at that point on your chart, you always see something like this, a doji candle. They are all dodgy candles, or they are indecision candle, but they are just different. All right. So like this one is a dodgy candle. This one is a spiny top, and this one is a highway candle. So we talked about patterns last week, right? We talked about patterns, and we don't need to go into it anyway. But what's really why they matter in trading is that they helps you as a trader to anticipate market direction. All right, once you see patterns, you now say, okay, if it is a bearish trend, a trend that is going down, you've been selling, but once you see patterns, once it forms, you should change your bias immediately. Now, at that point, you'll be looking for a buying opportunity instead of selling opportunity. All right, so it helps traders to anticipate market direction, and it also helps traders to time entry and exit points. All right, by the time you see patterns, you now know, okay, you've been selling, you need to take your profits, even if it has not hit your profit target level. But once you see that pattern form, you just know that you need to take profit at that level. Then you wait for that pattern to fully form. Then you now change your bias and be looking for a buying opportunity. And it also help traders to manage risk more effectively. Because once you see pattern, instead of you staying there again for trend to now turn and come and hit your stop loss, you'll be making profit, and because of greed, that is what happens to most traders. Because of greed, you just remain there, and without you knowing that the chart has already given you a sign that the trend is about to reverse to opposite direction. So at that point, all you need to do is just to take your profit, the one that you have already made, take it and wait for the next opportunity. So when you see patterns, you just know that you need to exit the market immediately. Now, there's something to note. Each pattern has its own story, because all those patterns you see, some will tell you, okay, this is the direction of the trend. Now the trend is about to reverse. Now the trend is about to reverse, or at a point of indecision, either buyers, they want to push the market up upward are all the sellers they want to push the market downward. For example, a hammer, which you have seen before, a hammer, just a candle with a wick below, it shows that sellers push the price down, buyers regain control by the close of the time period, hinting at a possible bullish reversal. So a trend that has been going down, all of a sudden you now see the last candlestick, you see a rejection with a long wick, that is a hammer. Then automatically you now know that, okay, buyers, they have stepped into the market. A bearish trend will now have to turn to become a bullish trend. So we call it a bullish reversal. Then we now have to talk about what is a trend. We'll be talking about trend. You need to know what trend is all about. In a technical analysis, trend represents the general direction in which the price of an asset moves over time. Recognizing the type of trend is crucial for making informed trading decisions. When you are trading, or when you want to perform your technical analysis, for example, when you open your chart like this, when you open your chart, the first thing you want to first of all note is, where is the trend going? You want to know. All right, you want to know if it's bullish, that means it will be going up, creating higher highs and higher lows, or maybe it's coming down, maybe the trend is coming down, creating lower low and lower highs. So those are the things you first of all identify. If as a trader, if you are not able to identify the direction of trend, that means you are not yet a trader, because that is the basic, that is the first thing you need to identify. Once you open your chart, before you perform a technical analysis, all right, you must know the direction of trend. If you don't know the direction of trend, that means you are not yet a trader. Because by recognizing the direction of trend, that is when you'll be able to now say, okay, if it's bearish, you know that, okay, what I should be looking for when the trend is bearish is how to take advantage of that bearishness and sell for me to make profit. If it is a bullish trend, you will now say, okay, it's bullish. That means the price is rising. Okay, I will now look for an opportunity when price pull back to a discount level. I will now enter. So you have to now mark out the POIs. You have to now mark out the POIs, and from there you wait for price to come there. Then you will now take position so that you can now buy. So we have main type of trend. We have the uptrend. That is a bullish trend. When the trend is going up, we say it's bullish. All right. The characteristics of a bullish trend or an uptrend: price forms higher highs and higher lows. By the time I will show you in a moment so that you grab the concept. When price is making a higher highs and a higher lows, then we say the trend is bullish, or we say it's an uptrend. And it also indicates strong buying pressure. By the time you see a push to the upside, pull back, push to the upside, pull back, it's making higher highs and higher lows, we know that, okay, there is a strong buying pressure. And apart from that, we also have, oh, sorry, one moment. And apart from that, we also have, it also indicates strong buying pressure, and traders often look for what buy opportunity by going long. And anytime the trend is bullish, the only thing you should be looking for is buying opportunity, how to buy. All right, how to buy. So when a trend is bullish, you don't look for a sell opportunity, except maybe you just want to short the pullback. All right, that one is more
Sorry, I
advanced.
have a question.
Okay,
Does a trend, does it how long does it last?
a trend, it depends. If there's a volume, it can last. It depends. Let me stop there because it varies. All right, because we have the broader trend, that is the overall trend direction from the higher time frame, and we have the immediate trend. That is the intraday trend. So if you are now asking what will be the duration of a trend, I will not be able to answer that, because if he wants to move, he move from point A to point B. All right? He moved from, that is the practical example. All right? If you want to now, for example, this, for example, now, this very one here, okay, from here to this point, you see, from this level, one moment, where is this thing? From this point here to this point, all right, this is a push, a full movement from the higher time frame, from here to this point. You see, before a pullback, before this pullback, but within this uh, the broader trend, you see the trend created a structure here. There's a pullback. It created a structure here. There's a pullback. It created a structure. So within a broader trend, there is internal trend also. All right. So when you like a higher time frame, for example, I will give you an example. A day, when you open a daily chart, when you open a daily chart like this, inside the daily chart, the 4 hour, let me clear all this so that inside the daily chart like this daily chart, you can see there are even waves inside. Apart from this push to the upside, there are waves inside. So inside this daily chart, we have 4 hours inside. All right, we have 4 hour movement chart inside. So a push to the upside, then when it's pulling back, this, you now see all these waves. Inside the trend, we have 4 hours. Inside a daily chart, we have 4 hours. So for somebody to now say, okay, a trend lasts for 1 hour or 2 hours, no. Because if there's going to be a daily push, this is a daily push from here to this point. All right? This is a daily pullback. You cannot see. So if you now want to now check the duration now, for example, if you want to check the duration, for example, from here to this point, look at, From here to this point, you see.
I'm not seeing that this
Okay,
thing.
you cannot.
Okay. 14 bars. That means 21 days. I see
21 days,
21
you
days.
can see. It's telling you between here and this point, 21 days. Do you
Mm,
understand?
yes.
So when you now do, you will, there are position traders, they are the ones that can take position here, or a swing trader. They are the ones that can enter from this down here and leave the trade to run up to this point. But most retail traders don't do that, because now you will not find opportunity, you find less opportunity when you are on a higher time frame. Now, as an intraday trader, as a retailer, what you need to do, you use the higher time frame to know the direction of trend. Use
What
that
is
higher time
interrate
frame.
trader?
Eh?
What is interrate trader? What you just said just now.
Intraday trader. Okay, intraday trader simply means somebody like a retailer, a retail trader who opens
Okay.
position in the morning before the close of that business day, you close your trade.
Okay.
You understand? So it's like you can even choose a session. All right, you can even our next section now will now treat the type of section that we have. We have the New York session, we have the Asia session, then
Yes,
we have
yes.
the,
I know that one.
okay, you know all those ones. So
Yes.
you can even choose your session that,
Okay.
okay,
Okay.
New York session open around 1. All right, 1. Then you start your trading day
As from
by
one.
1 o'clock, then close around 10 p.m. That is a session. While New York session opens around 7, all right? It opens around 7, close around 4 or 5. Do you understand? So we have
Yeah.
Asia session. So you can decide to even say, okay, as a retail trader, you, as an intraday trader or a retail trader, you just choose only one session.
Okay.
You choose only one session, maybe because of your busy schedule. You understand? Because of your busy, you are still working. So when you close, you now look for the time, the session that will resonate with your own lifestyle. All right. Some
Another
people
question.
they trade Asia session, that is night. Here from
Is
12
morning.
midnight till the next morning. You know, they trade in
Now,
night.
can one just be doing this trading without engaging in other for example 9 to 5 work job?
Yes, there are people, so many people. That is what they do. They don't do any other thing.
Hmm.
You not take it as
Your
okay,
job.
this is your job, this is your source of income. But you have to first of all build capital. You have to first
Okay.
of all build capital. You have to load your account. Do you understand? You need
Yeah.
to have a capital where you will now be using to trade. Most people, what they do is, uh, if you cannot raise capital by yourself, you take a challenge. We have different pro firm that offers
Loan.
capital. They offers capital. You trade for them. It's like you go into a contract with them, you'll be working for them, but they have the cap, they will provide the capital.
Mm-hmm.
So anything you make, you people share it. Normally,
Okay.
normally you that is some 90, they take 10%, you take 90%, some take 80%, you take 80% of your total profit, they take 20%. It depends on the pro firm, but you have to go through a process. All right? You have to go through a process. They will have to, first of all, give you a challenge to pass first, then
Okay.
verification. They have to go through a verification process again, then before they now take you as their trader, then they will fund your account.
Just
Yeah,
like what happens in the bank. There are guys who
exactly.
are doing that.
Yes, they will now fund your account. You will now be using it to trade. That's all. So anything
Hmm.
you make, you people share it. That is
Okay.
what most people do. Or if you have your own personal capital, it's okay. But
Ranging
you
from
have
how
to
much?
have the knowledge, not just jumping into it and be thinking, you know. You have to have the knowledge, the skill. You have to acquire the skill first. You have to choose a strategy and master it. You have to master it. And that is the reason for that challenge they will give you. They will give you a target. Do this. You understand? They will set rules for you. If you are able to abide by those rules, you just pass. Let me show you one thing. Um, I know sometimes it's one need to do I even where did I even where did I even put this? Hmm, then where did I put this thing now? I just wanted to show you. Hmm. Anyways, I can't find it now. Okay. All right. So we're talking about, a bullish trend, right? So now the illustration of a bullish trend with higher highs and higher lows. Remember, here we talked about why is this thing hanging? I don't know why it's hanging like this. Here we'll talk about the characteristics. The characteristics why price forms higher highs and higher lows. So it indicates strong buying pressure. So when you can now see the illustration of bullish trend with higher highs and higher lows. Now, what we mean by higher highs and higher lows is that price took off from here, push, created a swing high. All right, it created a swing high. Then this is a moment of a retracement. Price pushing from a discount level to a premium level. Once it gets here, it has created a structure that is a swing high. Now it now needs to pull back into a discount level before it push again. All right. Now from here again, he has created a swing high, breaking this structure.
Higher than the first level. Yes.
Exactly, breaking this structure. All right. So now that this guy now, what you should be expecting, now that he has gotten here, going by this scenario, it's supposed to come down again to a discount level. Now, as a professional trader, somebody with experience, all you need to do is you draw a horizontal line like this, all right? You now use
Mhm.
your Fibonacci retracement to plot it from here to this high and drag it. Now, you are waiting for this price to come back. Once you draw this horizontal line, you are waiting for price to come back to that line, to retest that line, then you enter. That is how to trade. You enter. As you enter, you push, as the price is rising, where you should be targeting for you not be too greedy, target this high, because this is 100% sure that once price retrace and it finds a support here, price will rebound, then it will start pushing to the upside. The target will be here because price will have to go and take out this high. And this high here is being regarded what as a turning point. Price can just spike a little up, then retrace from here because he has already done his job by taking out this high. So you should not be greedy as a trader. Always, once you enter from here, target this high. Your target should be this high. Your target should be this high. Even though at the end of the day, price has already hit your take profit target, your profit is safe, and you see it continues to rise, no problem. Price cannot rise forever. It will get to a point, finds a resistance, all right, the swing high. Once it creates a high, what do you need to do? From this high here, draw a horizontal line, wait for price to come and touch this place. Once the price retrace again, push down to your discount level. All right, push down to your discount level. You join the price again. Don't join this thing again, the trend. Buy from here. You take your profit here. Now, goes by this scenario. This thing now has taken this high. As it's going up,
Sorry,
what you should
sorry,
be
sir.
expecting now, you draw your own line again, wait for price, as it's coming back, it will come back to a discount level, all right, for it to create a swing low. Once it creates a swing low and you start to see a reaction, you enter there, push again. So that is literally how we trade. There's no thing there. But this thing you see, this is a textbook illustration. In a real market, is not this clear. Do you understand? It's not
Okay.
it's not as smooth as you just like as you are seeing it. All right. But this is how trading is all about. Then in the real world, the real market example, you can see price started from here, pushed to the upside, it pulled back to create a low. All right? This is your entry. You enter from here, target this high. Price push to the upside, taking out this side. Then you now see small wave here. This is the main trend up to this point. The next pullback is this. The next pullback is this. Enter, then push to the upside. The next pullback is this one. All right, because if you like this, you see, draw a horizontal line like this, price pulls to this point. Once price gets to this level, you enter, you push the price to the upside. So this is a clear example of a trend, a bullish trend. This is how it is in real market. All right. So if I should, you can see this one here now. so that let's scale down so that you see more information like this. You can see price push from here. Price push from here to this point, came down. Push up, came down. Push to the upside, it came down. What happened? It pushed a little. It did not do anything. It didn't go up. It didn't take out this high. Neither did it get to this point. It now pushed to this downside. All right. It pushed up again down. You now discover that here it has violated this point. It has violated this point. Now, what you should be thinking of now that this one has happened, it has violated this level, you should be thinking of now that it has violated this level, you now know that this is a very deep pullback. All right, it was bullish before, now it's now bearish. Up to this point, it was bearish. Now, what happened? It pushed to the upside, taking out this low and taking out this high. This is what we call market shift. I will show you in a moment. This is what we call market shift. All right, it's been bearish now, it's now changing gradually, it's going up again. This is just a clear example of what happens in the real life market. There is no any other thing. If it's in a bullish trend, you wait for price to pull back to a discount level before you buy. All right, if it is, let's say now, for example, this one is a bearish trend. It pushed down, push up. Then once you enter from here, price will come, take out this low. All right, taking out this low. When you draw this thing like this, what happens? Here you wait for price here. Price will come back to this point. All right. But now coming back to this point, you enter from here. Price will push to the downside. Now the next push, you're supposed to now draw a horizontal line here, waiting for price to come back here. Now, what happened? Price rose above this level. That means something is happening. Because for price to now stall here to find a resistance, you must see a rejection. You must see a rejection of price here. You must see. Now, at this point, there was no rejection. So that tells you that, okay, this guy, something else is happening. So you need to just wait and let, as a matter of fact, you can see a very P-bar here. You can see a rejection, a very strong rejection here. This one now is an indication that the buyers, they have rejected the price from this level. And why is it that? You see that there is a resistance here and a support level here that is very, very obvious. And why is it obvious? It's obvious because this is where a change of character occurred. A change of character occurred here. So price is, you see, price action made a reference here. It retested this level. All right. It came back again. You see, retested this level again. From here, it now bounced. So it's going up again. It has resumed the underlying trend. So when we say a broader trend now, a very a broader trend that is from the higher time frame, if you want to read the structure from the higher time frame, you see this is the main structure. This is the main structure. This one, then this is the correction. This is the correction up to this point. Then this one again, this is the pull back to it. Then price should go up from here. Now that he has gotten here, it should go up from here because there's a strong support level here. That is why there is difference between there's difference between a broader trend and the current trend. Because from the higher time frame point of view, if you look at the trend, That is a broader trend. It's broad, very, very broad. And people who follows the broader trend, those are the people that makes money the most because they are very patient. Because for you to follow this trend now completely from here to this point, you need to hold your position. You need to hold your position. Now, look at it started when? Thursday, the 15th of May, 2025. Now, we stopped here, and before the retracement, what happened? Here, that is Monday, 16th of June. You see, from May to June. So you'll be able to, you took your position here, allow it to run till this point. That is a whole 1 month. All right. So as a retail trader, you don't, intraday trader or a retail trader, you don't have that patience of holding a trade for a whole month. It's all those position traders that does that. They will all those
Okay.
institutions.
Sorry, sir. What's the difference between intraday trader and that position trader?
Okay, position traders are people. They are traders that hold position for a very longer period. All right, like all those financial bodies. Those ones they operate on higher time frame because it's the higher time frame that gives the direction, the overall direction of the trend. So what they do, they take their position on a higher time frame. All right. So once they take position, they know where the trend is going because they will be the one to know, they will be the one to even say, okay, they want to enter from here. They want to enter from here. They want to take the price up to this level before it retraces. So they will enter, place their trade here. Then they will leave it to run all those banks, financial body, hedge funds. But individuals, once you enter from here, you want to take profit here, sharp, sharp, and before it pulls back. We don't want to see price action going up. After you have made profit, then you will now start coming down. Your profit will now start decreasing. We don't want to see that. All right. We want to just every day, once there's an opportunity, you enter the market. Once you hit your take profit, you are out of the market. All right. But position traders, they hold position for like 1 month, 2 months, even a year. They trade.
Even when it goes down and comes up, goes down and
Yes,
comes up.
the
Oh, okay.
fluctuation, they don't care. But the only thing they know is that the price cannot come back and take them out. If it's coming back, if the sellers are pushing the price to take them out, they will pump in money to push it up. They will load their position to push the price up. Do you understand?
Okay. Okay.
So as they are seeing that the price is coming down to get to this discount level, they enter another position again. They will push it up again. When it's coming down, they load another position, they will push it up until they are satisfied. So the intraday trader, they are like us, we enter position, we take position in a day, close our trade on a daily basis. We just allow our trade to run for some hours, but on a business, every business day, we must close our position. All right. Then we have swing traders too. The swing traders, they take their position. It can run overnight like a week. You understand? Some weeks and all that. But position traders, their own runs for weeks, months, like that. So that is the difference.
So yeah, intraday traders just do their take positions for a short period of time,
Yeah.
and then the swing traders, that is just let's just say they are in between. They are not longer and then they are not shorter. They're just in between the intra and the What is that other one again?
Position traders.
Position traders. Yes.
Yeah. So those
Okay.
ones, the
That
swing
means
trader.
position traders takes longer time.
Yes.
They hold. Okay. Okay. I understand now. Okay.
And we also have investors too. So all those ones, they hold their position for years. They hold
Okay.
for your hand. So their own is they take position, they allow it to run for a whole year. You understand? They don't care the fluctuation, ups and downs and all that.
Okay.
Mm.
I sent you a message. Check. So that means there are different types of traders,
Yeah.
which includes this intraday swing traders, position traders,
Mm.
and then investors, right?
Maybe you have forgotten this thing. All these are things we started with now. You know, uh, so we have intraday traders, we have the swing traders, we have the position traders, and we have investors. So the intraday trader takes their own position, allow their position to run for like hours, but they close. The main point there is that they close their position before the business day closes. Do you understand? Their own is they trade, they don't hold trade overnight. But if there's any reason for them to hold trade overnight, okay. A day or overnight is okay. Then swing traders, they leave their trade to run a day, 2 days, a week, all right, before they close their position. Then position traders allow their trade to run for like they will run for months, all right. Then investors, their trade can run from months, 6 months, 7 months to a year. So I hope that is clear.
Yes, understand.
Okay. Then we have the downtrend. The downtrend is also known as what? The bearish trend. Price forms lower highs and lower lows. It reflects selling pressure and market pessimism. Traders may seek short or sell position. When there is a downtrend or a bearish trend, as a trader, or the opportunity you should be looking for is how to sell the market. All right, is how to sell the market. So this is a kind of an illustration that you will see a shift from bearish to a bullish trend. Now, when we say bearish, we are simply saying a trend that is coming from up to the downside. All right. So this is a bearish trend. It pushed, created a high, a low, then pull back to a premium level to create a lower high. Now, the next push will be to break this high and this low to the downside. Once this low is taken and price has created a lower low, this is a low, this is a lower low. This low is lower than this. Now, all you need to do is mark this high horizontally, wait for price to retrace to that level. Once price retrace to this point, then you see a hesitation here, a rejection, or a bearish engulfing candle, those ones that we have treated, then you enter and sell. Your target should be here. This is a scenario where a bearish trend is now turning into a bullish trend. You see, after this break of this high and after this break of this low, what happened? Price pull back to this point. Normally, it's not supposed to pull back above this level. All right, but you now see a scenario whereby price action will now move and now take out this high. Once this happens, we say market shift or change of character, meaning that the next move now will now confirm your bias that, okay, this guy now is supposed to come. If this underlying trend supposed to continue, this guy is supposed to pull back, push and take out this low. But when you now look at the structure, you now discover that price pull back and stopped here. All right, it did not violate this low any longer. Now you now say, okay, this is a clear market shift because there could be a flip zone. All right, there could be a flip zone. Price in a situation whereby price broken structure and violating this high, now come back again and break the structure low, taking out this low. That is what we mean by flip zone. All right. So at this point now, when you now see that price action pull back to this level and it did not violate this low, you now know that, okay, this is a market shift or change of character from the current bearish trend is now going bullish. So when price now stop here, the next move should be to take out this high. So eventually when price started going up, it violated this high, then it created another high. The next thing what you need to do, once it starts retracing backward, just mark this point and wait for price there. Once price get here and you just see reaction, there must be a confirmation. Don't just jump in because price has touched the level. It might break and continue to come down. You cannot hold it. So the only thing that will tell you that price is holding there is all those reversal candle there. You can, once you see a rejection, then you now see a bullish engulfing candle, you know, okay, price is about to start rising. Then you now take position, then you start pushing the market to the upside. So that is how it goes. Then this is the real life market, the bearish trend. You can see it was bullish up to this point. Then price now created a lower low here. It created a low. Then what happened? It pulled back to create a lower high. It created a high. All right. The next move now for this trend to be established, for you to know that we are now really in a bearish trend, it has to violate this low. And eventually, what did you see? It pushed up to this point, violating this low. Then what you just need to do is mark this point like this horizontally, wait for price to pull back, or you use your Fibonacci retracement tool. Use your Fibonacci retracement tool. Your Fibonacci retracement tool. Put your Fibonacci retracement tool here from 100% to 0%. All right. Drag it out. Once you do that, wait for price to pull back to a premium level. Once it pull back to a premium level, you see a rejection here. Can you see this thing? Can you tell me what this formation is all about? This one, 1, 2, 3. I'm
Can't
asking
remember. Yes, I can hear you. But
1, 2, 3. This formation, 1, 2, 3, before you see price coming down, 1, 2, 3. This formation, a reversal that we have treated, this is what we call evening star formation. 1, 2, 3.
again,
1, 2, 3. This evening star formation. Remember, evening star formation forms at
at the high.
at a resistance level. All right.
Mm-hmm.
Now you see, once you see something like this, a rejection, another rejection, and the third
Comes
candle,
to the support level now.
this is what? This is a resistance level. This is a resistance level. All right. The evening star forms at a resistance level is the morning star that
Okay, that forms at the
forms
support level.
at the support level. Now, just something like this, you now flip it, turn it. Now, this bearish candle will be at this side. This one will still be at the middle. Then this bullish candle will now be at this side, facing up. That is a morning star. So by the time you see, that is why it's good to also, you must learn all those candlestick formation. You must learn them. Once you see them, you just know. All right? Once you see them, you just know. Just like something like this now. You see where I put my cursor?
Yes.
1, 2, 3. That is to tell after this pullback, see this formation, and you now see push to the upside. This is the morning star we are talking about.
Okay.
So maybe in your the books and all that, textbook example is very, very easy. You just see it, okay, it's big and but in a real life example, it's like this, like this. But you see, this is a rejection telling you that this is a very strong buying pressure. Buying pressure. Telling you that buyers are in the market. All right, in 2 minutes, in the next 2 minutes, we are going to stop this because I have to start getting ready. All right. So apart from that, we now have sideways or a range bound market. All right. So in a sideways or a range bound market, price moves horizontally between support and resistance level. Move between support and resistance level, and it indicates market indecision or balance between buyers and sellers. Traders may use range trading strategies to buy low, sell high within the range. All right. So when we talk about sideways or a range bound market, this is how it looks. It's just bouncing. This a resistance level. This is a support level. Remember, I told you resistance is like a ceiling. A resistance is like a ceiling. Then the support is like a floor. So price will just come down, go up, touch here, it will come down, go up again. Maybe sometimes it will not get there, it will come down. So if you don't know how to trade this kind of in fact, let me just say this, once you notice something like this, just close your system or just go and do another thing. Leave it until it breaks out of this range. Once it breaks out of this range, if the breaking out is below, then it will come back to retest this range. Once the price is accepted, then you now join, then start coming down. If it breaks above, wait for it to come back, wait for price to come back to retest this level again. Then you can now join to start pushing the price to the upside. So we have the bullish trend, we have the bearish trend, and we have the sideways or a range bound market. Now, the bullish trend is when you see trend forming higher high and higher low. It's going up, retrace, break the resistance, pull back, break the resistance as it's going up. When you want to, and the opportunity is that as it's pulling back, you wait for it to pull back to your discount level, then you now enter. That is an opportunity for you to buy. While a bearish market, you see it will create a low, create another higher low. It will come down, go up. As it's pushing back to a resistance level, then you look for an opportunity to sell the market. All right? And it's coming down to create a lower low. After the creation of that lower low, the next move would be price to pull back to a premium level, or you call it a resistance level. You will come back to a resistance level. All you need to do, once it gets to that resistance level, look for an opportunity with candlestick formation. Then once those ones appears, you look for an opportunity to sell. Why the sideways or a range bound market, you don't need to trade it. If you are not perfect, or even if you are perfect, it's not even advisable. You wait for a breakout. Once price breaks above or below this point, wait for a retest. Once price come back again to retest the level, you just know that, okay, the price has been accepted. Then you can now join to either sell or buy. It now depends where it broke out from. So at this point, I think we need to stop here. We take it up again next time.
Okay, thank you. But we'll start from this particular sideways and bring that
Yes.
up. So give me a second. Yeah, let's go. Let's go.
So please
Thank you.
endeavor to create time
Yeah. Yeah.
so that you can read those things, okay?
Baby, I'm moving. I don't dress, so I want come out.
Okay, no
I want
problem.
come
Just
out.
take
My
care of
slippers.
yourself.
I wear slippers. Hey, God. It's okay. Thank you.
All right.